For as long as I can remember, hedge funds and institutional investors have had several advantages over retail investors. First of all, they've got unlimited funds, so their money allows them to be able to move markets. They profit on the way up, and when they're tired of profiting on the way up, they decide to short the stocks and profit on the way down. They've got algos. They've got trading data. They use your own emotions against you. And to give you an example of what it's like to trade against an algo, it's kind of like playing chess against a computer, but you're doing it at the expert level. And I know that all of this sounds scary, believe me, I do, but it gets even darker than this. You see, they can complete transactions on dark pools, which means that we do not have any access to the data. Well, excuse me, yes, we do have access to the data, but it comes delayed. And the delayed data that we have access to is inaccurate, unfortunately. But fortunately for us, we can take comfort in the fact that only a little over 70% of all of the shares traded are done on the dark pools, so hey, at least it's not all of them. These companies like Citadel, they're not only hedge funds, they're also market makers, which makes things much better for them because not only can they see our exact orders, our stop losses, where they're set at, they can also set their algos to go fetch, kind of similar to playing fetch with your dog when you throw your dog a bone. Except the algos, they're not fetching bones, they're fetching your shares, which means that you're selling them at a loss merely seconds before the stock runs up again. What a cruel, cruel game these market maker hedgy mans are playing with us, or with you, the ones that are setting stop losses and doing things that you're not supposed to be doing. They also provide funding for all the large media companies so they can spread whatever type of FUD they want. If they want a stock to go up, they're going to have a message put out to make that stock go up. If they want a certain stock to go down, well, yeah, they're going to make it go down. You guessed it. They can also break the law without being punished whatsoever. Perhaps they'll get a small fine, a slap on the wrist, while we get yanked by our tails every freaking time that we deal with these bastards, which is pretty much every day that we're in the market. Now, I don't know about you, but where I'm from, we call this manipulation. It's stealing. They can literally break every single rule in the book, and the SEC, until recently, has turned a blind eye. Too blind eye. If you don't believe me, go watch yesterday's video where I exposed 10 years of Citadel's corrupt practices and exposed Citadel's dark pool, which they decided to shutter shortly after a FOIA request was sent to and denied by the SEC. I hope that's enough of a confirmation for you, because it certainly is for me. But with Gary Gensler in charge now as the new chairman of the SEC, it would appear that maybe, just maybe, the SEC is finally going to take action. But to keep them honest, my plan is to keep digging and exposing all of those that have earned the exposure. My intent is to bring more and more of the truth to light day by day until the trading misconduct, as it is referred to, stops. Your job, my dear apes, is to smash that like button so that these videos get as much organic exposure as possible, and of course, share them everywhere and with everyone that you know so that the message is loud and clear. After all, this is our message, the message of the apes. And if you are new here and would like to become part of our family and join this movement, make sure you hit that subscribe button and tap that notification bell so that you're notified as soon as I drop a video every single day. But enough of all that. We have a lot left to cover, so let's get right to it. The first thing I'd like to do is bring your attention to just one specific instance where there is 110% proof that Ken Griffin broke the law. The reason I am bringing up this specific instance, not that this is an isolated incident or even a rare occurrence for Ken Griffin, but because in many instances, we've seen that the SEC has refused to take action because they claim that it would be incredibly difficult to prove their case. While personally I do not believe that to be true, I'm not able to produce evidence to the contrary. However, what I am about to show you is in fact crystal clear evidence which shows a violation of federal law. Now, while the SEC is not the proper party to bring forth charges on the violation, it is still mind-boggling that the appropriate agency has not stepped forward to do so. And by not doing so, it does appear that some people, namely Ken Griffin, are in fact, or at least have been, above the law. So let's take a look at how Griffin violated the law, and then we'll wrap this video up with why or how he is potentially getting away with it. Back on February 18th, 2021, the House held a 4-hour hearing where Griffin testified under oath. This was the GameStop hearing, and if you've been subscribed to my channel for a while, you've probably seen several clips from that hearing. The purpose of this hearing was for lawmakers to determine whether Citadel has too big of a grasp on the market and if it gains any advantages from the retail trades it buys. One concern which Citadel disputes is that its hedge fund might benefit unfairly by getting an early peek at order flows that the securities arm purchased. Now, Citadel, of course, says its hedge fund is kept separate from the securities operation, and while the latter does trade for its own accounts, it is legally barred from doing so ahead of the orders it receives. But if you'll recall from those clips that I mentioned a second ago, one of the congressmen did call Griffin out for his responses and pretty much called him a busta. And by that I mean a filibuster, that is. And this BS response provided by Griffin is just another example of filibustering, if that's even a word. And I say this with confidence considering that just last year, Citadel was fined $700,000 by FINRA for trading ahead of its customers. But to get right to the felony, to the point, and I'm going to give you a little bit of background information first. One of the congressmen questioning Griffin at the hearing that day was Jesus Chuy Garcia, or Jesus, an Illinois Democrat who, prior to that hearing, said he's eager to hold these hedge fund managers and tech giants to account and ensure they're properly regulated. Hedge funds and Wall Street elites get rich off instability in our financial system and don't care if making a quick buck means playing. I couldn't have said it better myself, but the same congressman asked Ken Griffin how much money was managed by his hedge fund. Griffin responded under oath with his response to Congressman Garcia. We manage approximately $35 billion, which prompted Garcia to suggest that Citadel was systemically important. This was probably the last thing that Ken Griffin wanted to hear, as it potentially implied that increased regulatory oversight may be needed for Citadel. So after hearing that, it's likely that Griffin's legal team quickly typed a response for him to read. And the next words that came out of Griffin's mouth: I believe that our hedge fund would not be in the category as systemically important. With $30-some billion of equity, it is simply not at the scale or magnitude of a JP Morgan, Bank of America, or Wells Fargo. So in his response, Griffin said Citadel managed $35 billion of assets. In the second response, he changed that to $30-some billion of equity. However, it turns out that Griffin was a little off in the amount that he provided in his testimony, and by that I mean off to the tune of about $200 billion. According to the Form ADV that Griffin's hedge fund, Citadel Advisors LLC, filed on January 15th, 2021 with the SEC, his hedge fund is managing not $35 billion, but $235 billion. To be very specific, $234,679,962,503. Now, this is significant because in a 2011 SEC final rule announcement, hedge funds were required to report regulatory assets under management, which includes not just the equity investors held in the hedge fund, but the additional assets the hedge fund had purchased with borrowed funds, known as buying on margin. Hedge funds were also required to report assets held on behalf of foreign investors. Since hedge funds manage all of the assets they hold, and Congressman Garcia was clearly attempting to assess the size of Citadel's systemic footprint in U.S. financial markets, it would have behooved Griffin to explain that the gross amount of assets his hedge fund 6.7 times the figure he had provided. That is $235 billion, not $35 billion. So Citadel's hedge fund consists of a series of sub-funds that have varying investment strategies and asset classes, including stocks, bonds, and commodities. A Citadel hedge fund brochure that is also on file with the SEC explains how leverage. The sub-funds generally invest on a highly leveraged basis, and the funds may leverage their investments in. According to Citadel's Form ADV, a majority of its sub-funds that hold the largest amount of gross assets are organized in the Cayman Islands, a jurisdiction prized. Those include Citadel Multi-Strategy Equities Master Fund with $59 billion in gross assets, Citadel Equity Fund Limited with $25.7 billion in gross, Citadel Kensington Global Strategies Fund Limited with 17, and Citadel Quantitative Strategies Master Fund Limited with $8.3 billion in gross assets. The SEC's Form ADV asks the question, what is the approximate amount of your total regulatory assets under management attributable to clients who are non-United States persons? So Citadel's answer, okay, wait for it, was that more than $170 billion, or 72% of its $234.6 of gross assets under management. Now, it is difficult to assess what that actually means because Citadel has multiple foreign offices, so it could be managing assets for wealthy foreign individuals. But since it views its sub-funds as its clients, and many are located in the Cayman Islands, that $170 billion. Now, in addition to Citadel's sprawling footprint in assets under management by its hedge fund, it is the largest market maker when it comes to retail trading in U.S. markets. According to Griffin's opening statement that day at the hearing, Citadel Securities, the market-making arm of Citadel, executes more trades on behalf of retail investors than any other firm. Congressman Garcia asked if that represented about 40% of all retail, and Griffin didn't dispute that figure whatsoever. But based on filings, we now know that the figure is somewhere in the vicinity of 47. But now, back to the testimony that Griffin provided. So understating the $235 billion that the fund manages by... Yeah, I didn't think so. But now let's talk about perjury, which by definition is the offense of willfully telling an untruth in a court after having taken an oath or affirmation. A person convicted of perjury under federal law may face up to 5 years in prison and fines. The punishment for perjury under state law varies from state to state, but perjury is a felony and carries a possible prison sentence of at least 1 year plus fines and probation. And I'm not just making that up, ladies and gentlemen. This is all according to 18 USC sections 1621, which, by the way, the acronym USC stands code, which would imply that this is a federal law. That being said, if you or I were to break the law, a federal law at that, you can be certain that we would be going to prison and doing some fed time. But since when have you known the federal government to be so soft on criminals? Well, to get the answer to that, I simply looked at where Ken Griffin spends his money or who he spends it on. And what I found was rather disturbing and really requires its own video, which you will be able to find on the end screen of the current video you are watching now. While I have you here, I wanted to quickly tell you about the brand new First Trade app, available for mobile or PC. The platform will give you access to powerful and easy to use tools and allows you to trade with less restrictions, zero commissions, zero fees, and you can use the first link in the description below to download a free stock today without having to deposit any money. This will greatly help out the channel and is always appreciated. And now back to your regularly scheduled programming. Congrats, ladies and gentlemen, you've made it to the end of the video. If you like what you watched, make sure you subscribe because I put out videos just like this one every single day. And please do me a favor and smash that like button if I helped you in any way, because it really goes a long way in helping the channel out and keeps me motivated to make videos every single day. Now, there's a lot of work involved, a lot of research, and a lot of time and effort into editing and putting these out daily for you guys. You can subscribe from your screen right now, or if you want to watch one of my other videos, I'm sure YouTube has some good content picked out for you on the left-hand side of your screen now. Thanks for sticking it out with me till the end, and I will see you guys in the next video.